a sell on Tesla, and increasingly analysts are really, not waving the banner for Tesla anymore. What's your base case scenario?
Yeah, we have some concerns just on the production volumes and hitting the targets to drive positive cash flow, and coupled with the amount of initiatives that they have underway, ranging from the China facility this week that was announced. They'll likely do something in Europe. You add up the shopping list that Elon Musk wants to accomplish over the next 3 to 5 years, and it's close to $20 billion. So our concerns are both on the ability to actually hit the volume targets that they have, as well as the ability, quite frankly, to pay for everything.
So I don't know if you've had a chance to read this amazing Bloomberg Business Week piece, but it begins with all of those types of things, the amount of debt. Tesla has $10 billion in debt and suffered a credit downgrade in March. It spends about $1 billion more per quarter than it's taken in over the past year. But it goes on then to reveal some very troubling things like health and safety issues. Are those things that you've been concentrating on at all, or that could be a problem for the car maker going forward?
Yeah, certainly I did see the piece that Dana and Tom and the team did. It's an excellent piece, but would encourage your viewers to look at it. But in terms of those types of externalities, there's certainly an issue around the edges. Quality's been an issue that we've been concerned about. In terms of the availability of data for us to assess in terms of worker safety and potential unionization, those are all kind of minor variables as part of our thesis of having an underweight rating on the stock. But certainly areas of concern that the article highlighted, but really just the nuts and bolts of manufacturing is the primary issue we have. This company was supposed to be sort of a lights out, fully automated company, and they just haven't been able to hit those types of volumes using the robots, and hence the tent that you referenced.
Yeah, I mean, on the Model 3 line, it's been robotic, and that's one of the sort of the things that was visionary about what Elon Musk was trying to do. But when the robots break down, as the article says, employees have to pick up the slack. And currently, Tesla has 10,000 workers at its Fremont plant, and GM and Toyota have less than half that. Is this sustainable?
Yeah, I think it's sustainable in the near term. I mean, in general, there's been a lot of overpromising and under-delivering at Tesla since it's become a public company. Quite frankly, for the other issues that have popped up over the past 5 years, they've tended to figure it out over time. They bought a robotics company called Grohmann in Germany. They certainly have the talent to get this done. I imagine all those German engineers want to take their typical August holiday and are working very hard in June and July to accomplish that. So hopefully it gets transitioned over. I think the hardest part will be just to transition from more manual assembly over to the full robotics, and then what the impact is on the margin profile of the company when that transition happens will be key for investors to watch. That being said, they're under a bit of a gun. You've reported this morning that the tax credit now is starting to expire or phase out, so they've hit that 200,000 vehicle mark, as well as they've got some debt due next March. So they certainly have a gun to their head over the next 6 to 9 months to execute and make this transition happen. How
concerned are you about a short burn or about the short interest? If you look at SI on the Bloomberg, you can see that it's about 27% of the float at the moment. So really, probably the highest of listed companies. I mean, will shorts get rewarded, Jeff?
Yeah, I think they will over time. One of the issues is that this company has a lot of convertible debt, and so a lot of the short interest is offsetting people that are long the debt. And there's ways of structuring your trades that you can make money in volatility, as your prior segment reported. There's certainly been a lot of volatility in the market over the past few weeks on the trade issues, and so there is an opportunity for people to make money. And again, there's not a lot of shorts out there that structurally think this is going to zero. There's certainly a handful of them, but in the near term, volatility can allow these folks to make money.
Now, there are 10 sells and 10 buys and then 11 holds. So it wouldn't be fair to say that the balance is tipped in any particular direction. What are people waiting to see if there's some kind of an acquisition or something that might tip the scales in favor of Elon Musk or against?
Yeah, it is a fairly even balance of buy, holds, and sells on the stock. In terms of M&A, that's always a potential. You saw Tencent take a passive 5% stake in the company. China is the largest EV market in the world, so if someone were to buy this company, a lot of people that I speak with think it would be, a Chinese-type company, not a Google or an Apple domestically. Certainly, that could happen. Isn't part of our thesis. I think for anyone to want to buy the company, you would need to see that they can effectively make high-quality automobiles at an effective margin.